Hello everyone and welcome to another weekly market forecast video. Hopefully everybody's having a great weekend. And here we are with a new week of trading after last week's FOMC. The market has been sideways in the most part in the currency market, and now we are getting ready for a new week ahead, and let's see what we can expect from the market. The dollar index last week we have explained that it was still looking to make a push to the upside. So we have got a fake spike to the downside, then the market pushed to the upside, and now it's accumulating here, and then we should see the next move to the upside from here onwards from the dollar index before the next move. So we believe that this is a consolidation period for a bounce before anything else takes place, and this will be our bias heading into the next week in the dollar. For the dollar yen, as we have said last week, we expected the market to give us a move to the upside. After a new low, the market made this move to the upside, and now we can still see some consolidation for another push to the upside to take place in the dollar yen. So we are only going to be biased to the upside still for the dollar yen for more upside towards 147.48 area overall, and this will be the next move as we have been saying over the last week. So hopefully some of you have been able to buy this one as we have been explaining. Of course, for more detailed analysis and timings and how we manage things generally, you should check us out with the link in the description. If you become a premium member, then you will receive also the weekly live sessions. You can ask live questions, or you can even watch the recordings anytime that you wish, as you will have full access to all the exclusive detailed analysis we provide there. So in general, dollar yen still biased to the upside. We will be looking to break this trend line right here towards the 147.8 area for the time being. For the euro dollar, as we have explained last week, as far as we are below this peak right here from 26th of August, 112, we are looking for another push to the downside before the next move, and this will still be our bias entering into this week of trading. Unless we break these highs, then we consider this to be another part of a correction move in the euro dollar, and this will be the next move we can see ahead for this pair. For the pound dollar, as the pound was a stronger currency over the last week, it has managed to make another high between this area. We can still see a reaction to the downside into this week. Perhaps another push to the upside to finish this move from 11th of September, and then we will get a reaction to the downside in this pair. And overall, this one can be a choppy market in the next 2 to 3 weeks overall. So this one, similarly, soon we should get a reaction to the downside for now. The pound yen, as we have explained last week, we expected the market to push to the upside from here. This is exactly what happened. So far the market went up about 700 pips, and we still have more to go. Perhaps some consolidation here and more upside into the next 1 to 2 weeks. We should be looking to go somewhere between the 194, 196 area for the pound yen before the potential next reaction. So we are still biased to the upside for this pair into the next week ahead. For the EURUSD, we have expected this drop, and then we have started this move to the upside. We can overall see that the market is correcting this move to the downside we have got from the 5th of August to the 29th of August, and now we are within this corrective phase of the market for the time being, and the next move should be a correction to the upside in this pair. However, we would not like this specific one for trading because it can get messy and slow within the coming week or so. For gold, we have reached the target area that we have expected over the last few weeks. As you have remembered, we were saying from these areas that the market should reach the target. This is exactly what ended up happening, and soon here we will enter into a period of choppiness and a pullback. So perhaps something like this to take place here and a pullback before the next move. Of course, this is a bullish market and nobody should be looking to sell it. Any dips you see, they are a buying opportunity for the time being. Perhaps we can get a pullback to this trend line, which can take us all the way to 2,535 or lower towards the 2,480 something. That could be a possibility. If so, this one should still remain supported in the bigger picture. So if this one drops, it's going to be only for a pullback before the next move. For oil, we have got this bounce after this move to the downside. We have reached the Fibonacci extension area. Overall, we can see a period of consolidation here and a bounce before the next move lower, and this should be what we can see ahead. So this is not a recommendation to buy because this market in the bigger picture is bearish. So it might turn lower from here or potentially one more drop before another bounce and then a drop. So this one can get sideways to lower into the coming weeks, and thus any moves to the upside, they could be limited. So we do not like buying this one at this point, but looking for potential selling bounces opportunities later on. From the indices, the SPX, S&P 500 cash index, we have made new all-time highs, and this is a bullish sequence, and the market should remain supported with any dips, as we have been explaining. This was our small pullback for another move to the upside. So overall, we can still make another push before a pullback. Any pullback is going to be a buying the dips opportunity for another push to the upside. Or alternatively, we might spend more time with this pullback before we go higher. In any of the case, this is not the market to be looking for selling, but waiting for any dips to be buying, as we have been saying for a long time. And there is a higher target in the weekly and monthly time frame for the S&P 500. Once again, if you want to know the bigger picture of the market ahead of time, all you have to do is become a member. All of our members, they knew months before, from April, about this move to the upside in the S&P 500, and they knew about the potential correction that we have seen in August. So this is something that at the end of the day you are investing for yourself. If you do not want to gamble in the market and take well-informed decisions, you should consider becoming a member and get the most detailed analysis ahead of time. For the 3Qs, as we have explained last week, we were expecting a reaction from this Fibonacci extension area. This was a potential buying area for those that know our analysis for a long time, and especially to members. We can see soon a pullback like the S&P 500, but this should be another buying the dips opportunity ahead. So overall, this one can also get sideways. So we do not see anything good for trading in the next coming 2 weeks for the time being. And with the GDX gold miners ETF, as we said last week, a pullback, another move to the upside was likely. This is what we are getting from the market, and soon we should see a reaction to the downside for a pullback together with gold before the next move ahead. So thank you so much for watching another weekly market forecast. Once again, if you want to get our in-depth and detailed analysis, whether shorter term or longer term, and know what to expect in the coming weeks and months from many instruments, consider joining with the link in the description. If you want the full let's say analysis and details, you should go with the premium plan, because with the premium plan we cover much more, and also the daily live sessions that we explain things that we don't usually do with the standard, which with the standard you just get a weekend's market overview, video report and trade recommendations, but with the premium you get our insights through the daily live sessions, and you can ask live or in real-time questions. So consider that. If you have any questions, send us an email at support@roiforecast.com, and don't forget to leave us a like, so this can help us to reach out to more traders, because we know that 90% of traders, they really need help and assistance, the right education with their trading. So this will actually help most of the people out there. So we would appreciate that as well. And we will see you in the next video in the coming few days. Take care.